Yo, what's popping, guys? Today we're going to review some trades, and it's been a freaking hectic week, man. Don't worry, I ended up just fine. I haven't made any huge profits, and but knock on wood, I didn't die. That's I think so many shorts this like totally blew up this week. But let's not waste any time. Let's get into it. We have three stocks or three trades to really recap, and I'm going to do my best to keep it short. I probably end up dividing this video or making three sessions out of it, just rather than one, so that you don't have to sit through 30 minutes of me ranting. So let's get into Wednesday trading. We have IGC. We had basically three pot stocks that were running. We had first of all the head of the game, TLRY, I think it is, which ended up going to $300. That was the head of the game. Then we had NBEF and IGC basically being the sympathy play of NBEF. And such of Wednesday, that was, I think, the first day as NBEV started to move, really. So this is the ninth. Let's look at the yearly. That's easier to see, actually. Yeah, so NBEV didn't really start to move significantly until when did the news came out? I think it was I think it was actually related. So on Wednesday, as the day I traded IGC, that was the day as NBEV started to really take away and get some momentum to it. Really kept on going and caught traction, so to say. But of course, I noticed this, and I noticed that IGC was also in the weed or pot sector, and that influenced me to take a smaller position than as if this had not been in it. Let's say it has been something totally different, like, I don't know, farming equipment. Then I could have been taking more size into this. But I ended up, it's the core concept of this trade. It's a very typical bounce short. You have the overhead resistance, and as I make this bigger, you'll see on the left corner you have the yearly chart, and on the right corner, the top corner, you have the intraday chart of those resistance lines that I have been drawing up. So what you can see here on the right top corner is that basically the resistance is from the yearly chart somewhere in between 180 to 205, which was the top of that day on the yearly chart. So my plan based around shorting or scaling in from basically 180 to 209, and of course increasing the shares as we got up there. Unfortunately, I didn't have a plan to enter at 190, which could have been a really nice top taking. But I'm glad that I even executed this trade, because I've been facing some issues with trusting my research and trusting my plans. So first off, right away, giving props for me to really entering the trade, even though it might seem scary. So I got a really nice average of, I don't know, 182.5, something like that. And then you'll see my my little plan down here. So I was risking, basically, if we got up to 205, I was risking 77%, was looking to cover at 27% gain from the 205 down to the 105. The statistics shows that somewhere within that area you should probably cover. Not going to give you the exact number. And also 105 is a psychological number. Human beings works human beings are very lazy. Most of the times we want to short into round numbers such as 2, or we want to cover into round numbers such as 105 or buy at that levels. And it was also kind of a brief morning pre-market support. So I did set up my cover 1/2 for 154 because, and you might say, hey, you said your cover order was going to be at 150. You have to think, man. You can't be like everyone else. You know, everyone else is going to think 150 is going to be the key area, the support. And also we're going to have dip buyers looking to buy at the 150. So you want to think one step ahead. You want to cover a bit earlier than the crowd because getting filled at 150 is going to be much harder than getting filled at 155 or 154. So that was my initial plan. So I tried to cover 1/2 of my position at 154, and in hindsight, of course, 155 is also a round psychological number, so I could have moved up to 156 or something like that. Unfortunately, I only got partially filled, only filled 1/8 of my position instead of 1/2, which led to me getting somewhat emotional about this, because I started to think that, hey, this is probably just going to go back down, and I'm going to have no problem to cover at 150 or 154. But it ended up not doing that and just grinding back up. And then as we got into the zombie hour or the midday hours, we just basically grinding up, and I was getting quite nervous because my plan is to scale out at least half of my position so that I pay for my trade and my commission, all that. So, and then just let the rest run. So I got emotional by the P&L, basically seeing all of my gains just getting away from $100 profits to $40. It sucks, it seriously sucks. And I was arguing that the trend was changing, and I saw sketchy bids and ask, and of course you start to see that when you think the trend is changing. That is just the way human nature works. As soon as you feel the smell of fear or danger, you start making up all this stuff. And so I started making up all these reasons why I should cover, and basically just covered straight up into this midday bounce, but ended up making 3% gain. Woohoo, like 15 bucks of the commissions. But okay, so what can we learn from this trade, guys? First off, as I said in the beginning, very good execution on this, giving props that following my goal of the week to be more self-aware and really trust my research and my planning. So first off, really big props for just taking this trade. That is just a pat on my shoulder. It's feeling good. I'm getting more confident with especially bounce short. Then also props for having the intentions to cover 1/2 to pay myself, and noticing that 150 is a key psychological number. That is also props to me. Things that I know I can do better and that I'm going to do better is not covering into the midday bounce, and be willing to shake a little to keep your emotions away. So let's say I missed my cover around here, chase, I don't know, 2 pennies to cover up here and say, hey, now I'm emotionally calm, now I can focus on the rest of the play as well. But as it comes to not covering into midday bounces, that is kind of a key, or something that I've been seeing repeatedly being a problem with me, that I tend to cover as we grind up in these hours. So how I plan to tackle this problem is basically detailing my plan more and more as the day goes. So when we start bouncing here, saying, hey, okay, my risk is going to be high of day. It's going to be high of day because we had the real resistance around the 180 to $2 area. this is where it could face problems, like typically or technically, and where more shorts would be interesting to short. So what I'm going to do until next trade is draw out lines for my risk and making more details as the day goes, not only detailing my entry plan but also my risk and cover plan, and keep on looking for these psychological numbers, of course. Keep on having this detailed plan of when to enter, and yeah, and I'll do 2 more videos because I don't want these videos to get too long. Peace, guys.